All right. Good morning, good afternoon, good evening. May the 30th. And I've been in recovery mode pretty much since I woke up this morning. Uh, Recycling trades over and over and over. Let's take a quick peek at the calendar before we go in too deep. We have housing numbers coming through in about 2 minutes. And then 30 minutes later, we have some gas stuff coming through, and that's about it. All right, we'll be done by the time the bill auctions come about. Okay, so that's it. The US core numbers, the GDP, and all that stuff came through earlier this morning and gave us a little push off of support, which we found overnight. Right, we found this support here on the daily chart overnight, happens to be a bounce off the 200. This trend line that comes from days ago, or sorry,
1 minute remaining. I'll lead with US pending home sales change month over month.
Weeks ago. All right, so we're bouncing off of this. Let's adjust it. There we go. Bouncing off of this trend line. We've already fulfilled an average daily range, right? So we're at the 45 mark. We need 46 to do an average. That's where the red line comes in. And I'm suspecting the market may have it in its mind to do a little bit more, right? So it wouldn't be out of the ordinary for the market to do 1 to 2 boxes more than average.
10 seconds.
That's how we move the average. All right, so let's just wait and see. And then maybe I can add down here.
Minus 7.7%, minus 7.7% lower than forecast, minus 1%. And pending home sales, minus 0.8%, minus 0.8% higher than forecast, minus 2%. Seeing pending home sales month over month, prior revised 3.6%.
That seems to be helping our euro position for now. And just as a quick review, yesterday I booked 8 losses and I continued to recycle the trades down here. I ended up with a hedge trade that never triggered. And then this morning, here I am recycling everything. Those 8 losses cost me about 1.5%, almost 2% yesterday. And yeah, 8 losses, and they were all at the stop loss. All right, so since then, it's all been 3 pips, 3 pips, 3 pips, just recycling those trades. The ones that close, I reopened them, right? I've been recycling the same margin over and over and over. I've made back the lost monies, and I'm looking now to close the remaining 6 or 7 trades. 1, 2, 3, 4, 5, 6, 7, 8. Oh, let's see. Oh, 20.
Stocks extend forward, Dow Jones down 1%.
Yeah, so because I've added some in this box here, since I've been recycling, I have 16 plus 4. Right, so let's see if we can spend the next hour, hour and a half, call it 2 hours, right? Between 8 and 10 my time, going a little bit higher. Right, there's so much discretion with this trading in general. You have to come up with your own hard, fast rules for your own personal limits. And that really revolves around the money, right? What you're willing to lose, what you're willing to risk. When I go with 1% per box, it's kind of like a guideline. There's times when I put less, and there's times when I put way more. And there's also times when, I have yesterday's 4% on the line and I'm using today's 4% to fix it. Right. So there's a ton of discretion here. It's whatever you're comfortable doing. And if you're trading prop, then you have to obey their rules, not yours. And that's where the limits are. Right. So understanding how the strategy works is only a small piece. What you can do with the strategy is something entirely different, right? There's there's a ton of stuff you can do if you start thinking outside the box. And this is just a guideline. It's just a frame of reference. It lets us see what the market is capable of doing, right? From this high to this low. That's a normal move, right? We just don't see these normal moves if we don't have a box, right? We don't see this as being normal. Right? So we're just exploiting what should be there with a frame so that we can see it. Right? Here, I'm waiting for a break. If I put the box on this swing low, I'm expecting to go to the top of the box. Right? It's just a recycling. Let's go and do the top down while we're waiting for trades to close. Right? So if I do the top down analysis like we always would do, we're looking at today compared to yesterday. Today is 16 hours old. Right? It's not a full day yet. It's not a complete candle. And so we're comparing 16 hours versus the previous 24. We can see lower high, lower low, but it's bullish and it seems to be trying to go higher, right? So let's take a look at that on an hourly, considering we bounced off of the moving average, we bounced off of the trend line. We're in a bounce, right? So bouncing off of all that good stuff here. Let's measure this. We've already fulfilled the average. If I remove the junk, there we go. We're butting heads into our average daily range, which happens to be resistance. If we break through that resistance, we have more resistance, right? So even if we break through this, it's not open skies, right? We have resistance along the way. We have reasons to find a slow and even maybe a pullback or a reversal, right? So surviving or expecting a break, that's only half the equation, right? What we get from it is yet to be determined, right? So let's go take a look at this on a 5-minute scale. Right? Yesterday, I was playing up here. I was expecting a bounce, one last bounce, and instead I got this, right? I had to survive through this, basically make money through all of that. And then today we're just now coming back to where we were. Right? So I'm recycling 1, 2, 3, 4. I just closed 4, so I'm putting 4 back on. All right, so if we check the 5-minute chart and we look at the ladder, we will have our ceiling somewhere around here. It's just visual.
US Treasury yields extend fall after US housing data. 10-year yield last down 6.2 basis points at 4.561%.
Right, so we're just using our mind's eye to connect the dots. Right, nothing spectacular, nothing crazy. So let's go and recycle these. Wait on the red candle. Wait for a pullback or some kind of a, oh, there we go. 1, 2, 3, 4. All right, so now that I'm in the upper box right here, I put 4 trades that belong in that box and I pull down the average. Right, I've been pulling down on the average since 5 o'clock this morning. Right, for about 3 hours now. Right here, I started pulling down my my break even. Right, and I've been recycling on the break even over and over and over. We've made back the losses from yesterday in money. Right, so if we look at this just intraday, right there. Yesterday, I was playing in the top there, expecting another bounce, and instead I got this. And so we had to survive that. I took losses for the first part. I hedged for the second part, and here I am now recycling the trades. Let's recycle. And back to 12. 11. I'm bringing it back up. 2, 3. I don't want more than 16. When I have 20, it's because I have 16 plus 4. And that's aggravating to me. I don't like going too heavy like that. Close my window. There we go. That's noisy. All right, so we are back outside of our channel. Or we were. Yeah, we still are. Let's see how much more we can do. One more box, 2 more boxes. And we've surpassed the average daily range. Right? This is more than an average day. So it's not going to the moon, right? Not without some kind of a catalyst. And so I'm really just trying to get to break even or a little bit beyond. And that's why I keep pulling it down and making money on the way up. And then when enough is enough, we can say, walk away. Yesterday was a unlikely event, but they happen. You know, we're playing off of a bounce, and instead of a bounce, we got a break. And so, ideally, it's a measured move, and the measure is within 36 or a function of 9, right? So it's 36, 45, 54. And so you can envision one box at a time. And then because I'm walking away every day at a specific time to do stuff, I took the losses and then I came back and I hedged. Right? Walking away, I just didn't want to walk away with the hedge on. Speaking of which, it's busy season here in Jasper. Oh my goodness. I went to the chemist and I was there for about an hour. Let's see what we have going on here. Recycle the trade if you can afford it. All right, I still have 2 more clicks. All right, I'm just pulling down on my average. Every time we close a couple, I reopen them so that the average stays put or comes closer. At this point, I have a blend of yesterday's trades and today's trades. Yeah, stuff here can get pretty messy. Things like this. And 2 boxes at once. And then the rest of the day is a recovery event. So we're back into this bottom box. If we measure from the swing low, we're back into this lower box here. Just gonna give it all the way to some kind of support, something like this, resistance / support, something like this. And this is a mix of some of yesterday and some of today. I just don't want to go nuts with my clicks. I have to keep track. Let's go take a peek at our dollar index like we would every day. So yesterday we were pushing up in this zone here. You can see how we broke through and came back under. All right, so we tested the inside swing here. Came back down. Now we're testing support. Happens to be a moving average. Our yields are on the way down. We have ways to go still in order to find some kind of support. Right, so this bodes well for euro. We'll see. No need to panic. If things go wrong, we can book small losses and continue to trade for small gains. Right there, I want to put clicks on. Another 15 minutes or so, and then we'll get some oil and gas related news. Typically does not impact our euro all that much, but it can impact the US dollar. I'm just waiting to see if I can to spend money up there. What's the, oh, there we go. There we go. I'll put it right there. 1 and 2. I just want to, so this was yesterday. Draw down. $500. And we've recovered most of that already. $37. 2.8, 2.8. 1,500. I am happy with this. That's average. Do we recycle a little bit more? Or was this the high for the day? Right? If that's the high for the day, maybe we're coming down a few boxes. Doop, 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 doop. We're trying to figure out what comes next. What will come out of this box? Right? Are we going down? Or are we going to go up and out? So close. So close. This thesis is very hard if you're trying to use fewer trades, right? The whole aim of this is to take your risk and spread it out. And so if you're not capable of spreading that risk, so if the rules or the regulations say that you can only have, one trade at a time, you're kind of screwed, right? They're forcing you to swing trade. And they're forcing you to be right out of the gate. And at the same time, they're trying to tell you to not pick tops and bottoms. Yeah, those are if you're trading with forex.com, that's a US broker. And that's what that is. It's FIFO, first in, first out. You have no choice. Those are the regulations.
Taking a look at the fear and greed index, 49 out of 100 equaling
Okay,
neutral. And the crypto fear and greed index, 73 out of 100 equaling greed. And looking at the VIX, currently down 2.52% at 13.91.
I'm not an American citizen, so I'm not using an American broker, and therefore I'm free to do whatever I want to do. You know, to use this method, you're going to be limiting yourself to maybe 1 or 2 trades per box. And then you're seeking the average of those 2 trades within that box. So it's an aggregate. Right? So yeah, that's the issue, right? The regulations where we live determine what we have to do. And then where I am in Canada, all 10 provinces have 10 sets of rules, right? So if I move 75 kilometers west, I now have different rules to deal with. And so what we have to do is figure out a way of making money that works for us within the rules we have. And that's it. It's a way of spreading your risk instead of taking it all on one trade and hoping that it works. What if you're off by just a few pips? Wouldn't you rather have multiple shots? Right? That's the idea. If I know I have the right direction, I want multiple attempts at it. I don't want just one shot and hope to God that I'm right. All right. So this idea here allows me to fix my mistakes. They're not actually mistakes. They're more like assumptions that did not work out. And so I'm just trying to fix my assumptions. And this idea of having 2 or 3 in a row, it's because I'm still convinced I'm right in the end.
At 10:30 a.m. Eastern Time, we get our weekly EIA natural gas change forecast, a build of 77 BCF on the prior build of 78 BCF.
Yeah, it boils down to the recycling. I figure out a way to take that 1% per trade and break it up. And depending on the rules that you have to live by, you may be forced to break it up only twice, where I do it 4 or 5, 6 times. Right. So, but there's ways to fix mistakes. This is what you learn to do, right? You'll be making mistakes the rest of your life. Don't try to avoid them, try to fix them. Right. We want to make fewer mistakes as we get better, but it's because we get really good at fixing the ones that are still around. Right. If you can't fix mistakes, you're not going to last for a month. And so this way of trading here allows me to make an assumption, be wrong with my assumption, and test again and again and again. And eventually the sum of my tests beats the average. Right? It's potential average yield. It's that potential that I'm chasing, and I'm chasing it with 4 or 5 clicks per box. Some of you guys may be forced to use one or 2 clicks per box, but that potential exists. And so if you don't want to be clicking the way I am, or if you can't click the way I am, look at a different time frame. Maybe you look at a 5-minute chart and you'll find yourself clicking a lot less. Right? The box will be slightly bigger, the clicks will be slightly worth more money, so on and so forth. But everything here can be scaled. Yeah, if you apply this to futures, you're limiting yourself to maybe 2 clicks per box and maybe maximum 2 boxes just because of the volatility and the amount of money we're dealing with. But it's not impossible, right? These are standard deviations. It's just a way of looking at things. All I'm teaching myself to do is to repair my mistakes. I've been making fewer and fewer and fewer over years. And the ones that I still make every day or consistently, I find ways to repair them. And so I'm still trading. The market is an illusion machine, right? It's always pulling a new trick. And we're learning how to see through it. All right, red candle. I'm already at 16. I'm going to slow down. I'm only 5 or 6 pips away from breaking even. Yeah, 6 pips away. Just going to wait it out. It's a lot of trades in the last few days. This right here, going all the way back, all the way back here. Right? This kind of stuff here, you have to let it go like a balloon. Just let it go. Forget that it happened. Right. And then continue to make 3 pips, 3 pips, 3 pips, 3 pips, 3 pips, 3 pips. All right. Erase this, overwhelm it, wash it off with a bunch of 3 pip trades. Otherwise, you're going to feel compelled to have this revenge trade going on. And then because you lost 36 times 8, you're going to try and make 37 times 9 or, something stupid. And then everything goes to poop. So no, we're not into that stuff. This is all about consistency. There's a time to hedge, and it's never a good time, but there is a time that, maybe it's the right thing to do. It's the last thing you want to put yourself in, right? It has to be built into your plan. And even that it's still the last step of the plan. If you throw in a hedge as a last resort move because, oh crap, I didn't see this
At 10:30
coming.
a.m. Eastern time, we get our weekly EIA natural gas change forecast, a build of 77 BCF on the prior build of 78 BCF.
The context has a lot to do with it. What's the context behind taking this hedge? It's not for making money, right? Hedging is not for making money. It's to protect the money you've already earned and to protect the bottom line from your account. So once you're in the hedge, the name of the game is to start taking risk off, right? It's to start removing the losers, start recycling the winners, add to your winners. This way of adding is because we're closing one that we get to reopen one, right? We're not stacking the risk, we're recycling the risk, therefore adding to the winning pile. We're adding to the wins, right? Recovering the loss. I've already overwhelmed yesterday's losses with today's wins. Right? So the idea is to get back on the horse and continue to ride. Learn to lose at 36 and learn to manage within that 36. Hedging just pauses things. You're still going to lose some of those trades while you're fixing, and so it's not a solution. It's a temporary way of allowing you time to think, right? Most times hedging will take place on something else entirely, right? Different instruments altogether. Come on, recycle. We're 3 pips, 4 pips away. It will close trades on the way to the break even. I will reopen trades on the way to the break even. I could take the target and move the targets away, make the targets bigger than 3 pips, but then I skew my P&L. I've already cheated myself out of profits yesterday by starting too early. Today, lucky for me, starting early is in recovery mode. And so it just happens to be going my way, not adding to the mess. Yeah, there's almost too much discretion with trading in general. Once you have a foundation, once you have a strategy to work within, all you're trying to do is make that strategy work better. Right? So you're thinking outside the box. What if I do this? What if I do that? The last thing you want to do is throw away the strategy. You know, in this particular case, let's go sneak a peek. Right? We're winning 97.8% of our trades. You know, out of 2,600 trades, we've had 57 losers. That's good. No, it's not something I'm gonna be mad at, right? But that did not start like this, right? When I started this methodology 4, 5, 6 years ago, I was 70, 80%. And it's because I've gotten better at spreading my risk, picking the right time to trade, stopping on schedule. You know, I've become a better trader. I've made that 30% that used to be bad, I've shrunk that down to 2%, 2.5%. It's showing up every day, wax on, wax off, different iterations. Hedging is something you end up doing once or twice a month, and is because you know you're right if you just need 10 more minutes, 15 more minutes. You know, it's this conviction thing that you have. Probabilities are still good. You know, everything is still lining up on the right side, except the money is evaporating. You know, you're trying to protect from evaporation. Stuff like this, we're still testing the high of the day. Recycling trades. You know, and those of you that started along at 8 o'clock here, you've probably had a couple of wins already to make up for yesterday's trouble. Some of you may have traded opposite to me yesterday and came out beautiful. Yeah, there we go. I think one of the keys to this methodology is the ability to size up and down. I use the Kelly criterion, you know, in general terms. You know, put the pedal to the metal when things go your way and back off when you're starting a series of loss. One loss is the beginning of a series, right? So yesterday I had 8 losers in a row, but it started with just one. And so as soon as you have series, you have to consider reducing your size because you don't know how long that series can last, right? You could be in for another 20 trades. So start reducing size instead of increasing it. Compensate for the length of the series. If you look up the Kelly criterion, you'll get a really good idea of what the concept is. All right, we're not far away. We're so close, like 3 pips. If I can get to break even, or even better than break even, that'd be awesome. We would have made up for yesterday's losses. Recycling is key. Yeah, and I prefer stop loss instead of hedging also. Much like you do in the comments there. Sorry, I'm trading on my other platform. Come on. There's nothing left on the calendar until 1 hour from now, when we have a couple of bill auctions. And so at the bottom of the hour, we would expect this move here to be complete, or at least near completion. And it tends to resolve in our favor. And then at the top of the hour, today is the second last London fix for the month. And tomorrow is the actual last day, right? And so there's still the opportunity here to see volume coming through, or volatility come through. Flow, right? These last 3-4 days of the month, we tend to be trading a flow. There we go. Recycle. There's one from today, one from yesterday. There you go. I'm pulling down the break even, and I'm trying to not have more than my normal 16 clicks. I'm still fixing yesterday. Today is all about repair mode. And while I'm in repair mode, I'm making money. A little bit more. I was looking at my gold chart over there. I'm looking for gold to go slightly higher, 23.55. Big picture, we're still outside of the channel, right? So we tested both sides. Boom, boom. Can we get to this level here? 840, 842. I just don't want to go over the number of clicks, so I'm just waiting. There's a level here in this zone, this area here. Slow and steady. Yeah, if you're trading CAD, keep an eye on oil, because oil was setting up for a breakout the last I checked. Keep an eye open. Yields are still coming down. Dixie still coming down. Right? Dixie still coming off of that support. Yields are still seeking support. So that looks good for us. Yeah. I personally don't trade the CAD because I live here and I have a tough time going to the grocery store and making up in my mind why is the loaf of bread so much money when the chart has not changed. Right? The chart is the same this year as it was a year ago, and yet the price of everything has tripled. And so I'm better off when I don't look at the price of the CAD because otherwise I just get upset. I feel hurt, taken advantage of, so to speak. It's hard to have, you know, clear head. Simple, crazy little stuff like this, man. I'm telling you, stuff bugs me. Learn to manage. Come on, come on, come on. We're so close, like 4 pips. Yep, 4.9 pips. And as it closes winners, I recycle them. And so I trying to keep break even at that level or near that level within arm's length. If we were to add rungs to the ladder, we're like right there. What a time it is to be alive. Love it. Squawk is really quiet. There's not much to talk about. US GDP numbers came in lower than expected. The inflation numbers came in lower than expected. All that good stuff. The wait is on. There it is. Somebody woke up. Come on. Snap out of it.
So Brent prompt spread in contango for the first time since January.
We're so close. And yet so far away. There it comes. There it comes. 19th nervous breakdown. Come on. Tired of feeling victimized. I want to be doing the threatening. There we go. Recycle these puppies. Two. One more. Back to 16. Testing the previous high. And I think we've exceeded the average daily range by a few pips. If we can get across the top of the box, that would be fan-freaking-tastic. Assume this is a breakout and assume we're going up here. Recycle. 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 I have one more. There I am. All right, then we're almost finished. Almost finished. We actually made money above and beyond yesterday's losses. We've recovered from yesterday to today. We've made money. Woohoo! Gotta love it. Gotta freaking love it. A lot of people don't see the value in what we do here. You know, the 3 pips, 3 pips, 3 pips, filling your pockets full of coins. There's a method to the madness. While everybody is trying to capture the body of the candle, you and I benefit from trading the extremes. Right? We trade from one candle into the next. We're trading the wicks. And that transition from the close of one to the open of the other. We're in that wick there. Right. So if we go to the daily, yesterday I was trading in that wick and I ended up over here. Today I'm trading in that wick and I'm over here. Right. So as we speak, we're extending the upper range. And at some point today, we will be in a wick. And I'm hoping that's after I complete this. Right. So I want to get up here and maybe turn into a seller. Right. And not a seller for the South Pole, but only for tomorrow's wick or today's end of day. I'm pulling down on yesterday's trades with today's trades. I'm 3 pips away and we'll have made money along the way. I'm $10 away from all of this here breaking even. Yeah, it is a money printing machine. It's a coin mint. We just have to be willing to accept coins. You know, I'm for a long, long time I was chasing bills in the wind. I was catching nothing. You know, like a butterfly net. It's never big enough. Here I just have to bend down. Yeah, it's the whole aspect of this for me was control. I when I swing trade, I surrender control until the take profit or the stop loss. And that drives me crazy because there's times when I wish I could interfere. There's a thing I have an idea that may make things better. And as a swing trader, you can't take part. You can't use that idea. And so
The
here,
franc strengthens more than 1% to 0.9037 per dollar.
here you have the opportunity to, you know, make money in the box and then think outside the box.
At 11 a.m. Eastern Time, we get our weekly EIA inventories, crude oil, forecast a draw of 1.8 million on the prior build of 1.825 million, with a range of a build of 1.5 million to a draw of 3.084 million. Distiller inventories, forecast a draw of 0.462 million on the prior build of 0.379 million. Gasoline inventories forecast a draw of 1.376 million on the prior draw of 0.945 million. And crude Cushing inventories prior a build of 1.325 million. Bear in mind, yesterday's API crude oil stock change came in at a draw of 6.49 million on the forecast of a draw of 1.9 million.
Well, that's that. So yes, Dan's asking about the videos. Yeah, yesterday's video is uploaded this morning. It should be released to YouTube in about 8 minutes. Uh, yeah, I uploaded yesterday's losses, and I put this picture here, this front of the day in the video, and then today's video will have this uh, as the opening slide. So, but yeah, it's the idea is to close the trades before I upload the video. And so I needed to have a more recycling before I could upload yesterday's work. Today's work will be uploaded right away. I'm hoping. We're what, 2 pips away? That's the kind of stuff that they'll go sideways for 6 hours just to piss us off. Gold is pulling back. There we go. One, two, three, and there we go. Now all my trades are in the upper half. I could start booking losses. I could start closing things. I could just get out of here and walk out a happy winner. I'm just gonna watch for the next 5 minutes or so and see where else we can go. I'm just going to give it till the end of the box. If we can't go to the end of the box, so basically over here or here, I'm just going to close everything and call it a day. right? So those are our alternatives. It either continues to go up where the probability is slimming because we've done more than the average, and that the longer we stand up here and slow down and unable to go higher, the more likely we are to come back down and start to go sideways for a couple of boxes. Right, just sideways, doop, 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 doop. Right. So I'm thinking top of the box and then get out, just run away, leave the casino, right? Call it a day. We have the UK fix or the London fix that's coming up. Yeah, this is when we tend to uh, have everything go
At 11 a.m. Eastern time, we get our weekly EIA inventories data. Crude oil inventories forecast a draw of 1.8 million on the prior build of 1.825 million, with a range of a build of 1.5 million to a draw of 3.084 million. Distiller inventories forecast a draw of 0.462 million.
There you go. Yeah, so whatever. This here is what I'm looking for. Right? I'm still looking for this move to finish. That's the dollar index and our yields. Right. So once I see this is ending, this is starting to stall, this is rotating, I'll be getting out of my euro. And in no time, flat. Right. So down here, up here, or here. The strategy is to see it stay in this current box. And then we react if it goes on the outside of the current box. Yeah, back outside the channel. Right, we remain bullish. Our dollar index is back bearish again. And I think tomorrow's news will be very critical to what we're chasing here. This 1.11 the euro. The proof will be in the pudding. It's a matter of time. Right? We just have to wait and witness it. Trade the reaction. Right? We're not fortune tellers. We can only forecast the extremes, or sorry, the edges of the box. Right? Within the box, our probabilities are extremely high. But the minute you breach the edges, probabilities start to slip. And that's where managing, or the skill of managing, comes in. And so it's because you expect a break and you know what to do if it comes. Right. So it's this being ready for just about anything. Right? We have a plan for the plan for the plan. You have a backup for the backup for the backup. And operating as an insurance company, none of these plans are free. And it's all in the hopes of saving money. Right? We're doing all of this, this protecting, this defensive type trading. It's to stick around for 20 years. I'm hoping to not be a flash in the pan. Yeah, guy, if you guys have the ability to leave the casino right around here, go for it. I'll be trading with the next couple of people, and then I have to run downtown again. But typical stuff, right? We want to stick to our business hours. We want to avoid working overtime for free, and then stick to a known model, right? And just like any business out there, you're going to over time find seasonality, find patterns. You're going to find times are better than others at certain times, and you take advantage, right? You schedule around that stuff. No, probably not trading futures tonight. I just can't make it work. Apparently, it interferes with my with my house life. I've been getting myself into trouble, and then the restaurant and all that kind of stuff. It's just it doesn't align with our schedule. I'm tempting to maybe trade futures in the morning, like every other day, or I'll find a way to make it fit. But right now, it's not working at night. Right, so I met support right here. If I remove all these blue arrows here, view options, deal map, right? We're testing this wick right there. View option, deal map. That is oil news. 4.1, forecast 1.8. Okay. The inventories are depleted. Right, let's wait this out. I'm just looking for a normal move, right? So if I find the low right there, normal move, it's almost here. Like we almost got it. It came within a pip or so. I'll just remove this. I'll remove this. And this is just a way to measure what is a standard 9 pip range. Okay? And this it starts from a swing. So put the box on the swing. This should be a standard move, right? It should go all the way up to there. We're testing support, that wick. I bet you were trying to get here. And I'm not a betting man. It's funny because I've never been to a casino. I've never stepped foot in one. I've never bought lottery tickets. I've been given lottery tickets, but I've never bought any. I guess I know the probabilities aren't in my favor. Watch it come all the way back down and then drag my 16 clicks with it. That'd be a disaster. Just testing a whole bunch of assumptions. Some of them are good, some of them are bad, some of them are so so. In the end, it's the average of everything you do, right? Potential average. Just don't stop, right? Here it comes. Here it comes. 19th nervous breakdown. Our 5-minute chart. It's that ladder. What does the ladder look like? Interesting. Okay, we're testing the wrong. That would be the next one. 847, 845. That so happens to be the edge of our box. In this area there. If this is a low, a swing low, this would be the beginning of a box, or the potential beginning of a box. We're just assuming things and trying to make money from those assumptions. As long as we have an alignment, with the upper time frame, this top-down analysis is designed to keep you safe, right? Trading the higher probability outcome. The lower probability outcome tends to get us into trouble or into a fix. You have to fix stuff. Yesterday, the low probability was the bounce off the trend line. Right? The higher probability was clearly the break off the trend line right here. I fell into the trap. I did it to myself yesterday. By starting earlier than my normal start time yesterday, I also opened the floodgates. Today, I walked up to my computer at my regular time. And instead of, trading the trend or trading whatever I saw, I was in the repair mode, right? So I was already in the position. I just had to unwind it. And so I already had my to-do list. I didn't have to do a top-down analysis. I didn't have to check the calendar. I just had to unwind my existing position. We found support right here, apparently. Right there. 10 minutes, 15 more minutes or so with any kind of luck. One more candle, 15-minute chart. With any kind of luck, we'll revisit up here. Somewhere up there. The second last fix is underway. And you can see the size of the bars right here compared to the bars over here. Right at the top of the hour, the bars suddenly got much bigger compared to what we went into the hour with. Right, going into the hour, the bars are microscopic, and then right at the top of the hour, the bars change size. Right, so all of a sudden we got real volume coming through with purpose. And this is not random. I don't know if you can hear it, but one of my neighbors is taking down a tree with a chainsaw. I'm not sure if they'll show up on the recording. The temperature where I live right now, 7 Celsius. I'm not sure what that is in Fahrenheit. 7 Celsius. I'm in the Rocky Mountains, the Canadian Rocky Mountains. Yeah, we still have snow in the mountains. Like if I look out of my window, there's snow all around me. Not in my yard. My yard, the grass is green, but the mountains around me are have snow on the tops still. The snow will be there until end of June, beginning of July. And then some of the north facing sides of the mountains may have snow all year round. They never get sun. Yeah, this is a Canadian version of the Swiss Alps. If you look up, Banff, Jasper, that's where I am. It's a national park. My version of a gated community. Yeah, that would be nice. 24 Celsius. That's the average summer temperature here for us. High to mid 20s. There we go. There's our fix. Keep it going. Keep it going. I want huge bars. Just one big, huge bar. Just wipe me out. If you don't ask for it, you won't get it. So I ask for weird stuff all the time. Sometimes I get it, sometimes I don't. And we're still flagging. To do, what to do, what to do. Next 15 minutes or so. I have to create a plan. What to do next? Well, we already know we've done more than an average day. And as such, we understand the average will start to move back up again, right? If we've done more than average, if we average to the average, it will go up. Right? So we know we are not going to the moon, not in this trading session. So those of you that are compelled to keep trading, you may want to be selling at some point, understanding that tomorrow may have a wick on the bottom before we finish higher. And that's why we'd want to sell, right? We want to sell from today's high into tomorrow's low and then go long again. All right. So we're thinking about the end of this daily candle and the beginning of the tomorrow daily candle. Right. So if we sell today, we might be selling into tomorrow's low and finish tomorrow higher. Right. So that's the kind of stuff we have to think about. What if it goes down and we finish tomorrow down here? Right. So I'm thinking tomorrow, this red line will be up there and this green line will be down here somewhere. And tomorrow, the candle will be in between those two lines. Right. So I'm just thinking about tomorrow, forward looking. What if? Right. If things go the wrong way, the what if scenario is quite different. And yet we have to have it. We have to think of the worst case. That way, if the poop does hit the fan, it's not a mystery. It's just a to-do. We have a job to do. It's a task. Those of us that don't think forward or dwelling on yesterday's mistakes, we're kind of stuck. And you have to let go of that balloon. It's all good. This is all good. Situational. The risk is a little heavy, right? I put all 16 clicks trying to pull down the average, but that's my normal risk. That's what I'm willing to do on an average day. And I have stop losses to match. Right? So I have the ejection seat. If things happen to me today, as they did yesterday, and I misjudged something, and all of a sudden, 1 15-minute bar later, I'm 25 pips in drawdown. So be it. Right? So be it. It's not a reflection on us. It's just an assumption that went haywire, that did not work out. Don't take it personal. So we had a breakout. It was short-lived. We're not finished yet, though. All right. We're still setting up for the banker's close and so on and so forth. Okay, so I'm gonna let you guys go. I have to go take care of stuff, and then you have your marching orders. Try to get out of your existing trades and walk out of the casino. If you stick around, you're going to be selling into tomorrow's low. All right. I'll see you guys later. Enjoy yourselves. Thanks, everyone. Bye-bye.